Hi, I'm Chris Matthiessen, a member of our merger arbitrage investment team here at Gabelli. I wanted to provide a brief update on the M&A landscape through the first quarter of 2024 and our outlook for the balance of the year. Mergers and acquisitions activity increased 38% year over year in the first quarter of 2024 to $800 billion. Within the U.S., $500 billion worth of transactions were entered into, a 78% increase for the same period a year ago. Activity outside the U.S. totaled $312 billion, a 22% sequential decline relative to the fourth quarter of 2023, but a slight increase year over year. On a sector basis, energy, technology, and financials were the most active, collectively accounting for about 50% of total deal volumes. Mega deals, or deals greater than $10 billion in value, totaled $278 billion in the quarter, with 14 deals being announced, the highest level since 2019. Private equity-backed transactions ticked up more than 10% on a year-over-year basis to $154 billion and accounted for about 20% of total deal announcements. This marked the fourth strongest opening three-month period since tracking began in 1980. Financial acquirers have tapped private credit and dry powder to fund transactions rather than utilizing traditional debt markets, as higher sustained interest rates have been a headwind to new deal activity. Private equity firms currently have about $2.5 trillion of dry powder, or capital that they need to put to work, which should be a tailwind for new deal announcements. As we move through the balance of 2024, we expect M&A activity to remain strong, with high levels of pent-up demand likely to drive transaction announcements. Companies will gain further clarity into the Federal Reserve's interest rate policy and the upcoming U.S. presidential election. But the main issues which buyers and sellers continue to monitor is the more stringent antitrust environment, particularly within the U.S. The Federal Trade Commission, or the FTC, continued its watchful eye on deals in the first 3 months of the year, requesting additional information from merging parties across energy and healthcare. But parties are drafting strong merger agreements with additional time allotted to consummate deals in the event of regulatory delays. Deals continue to get completed, though some on extended timelines. We've heard comments from many investment bankers about a strong interest in pent-up demand for companies to do deals, in efforts to gain scale, compete on a global basis, or acquire new technologies. Global political tensions will continue to add some hesitancy within the boardroom, particularly when evaluating cross-border transactions. Financial concerns have appeared to subside as buyers are coming to the realization of potentially higher for longer interest rates. We continue to expect sector consolidation, particularly within the oil patch, as well as within healthcare, as large pharma companies to look to replenish their drug pipelines, with several key therapies coming off patent in the coming years. And, of course, we're likely to continue to see strong levels of M&A within technology as companies look to expand their offerings or improve upon their existing technology stacks. Small cap M&A is also likely to be a bright spot over the coming quarters, as small deals have generally not received the same level of antitrust scrutiny that large or mega deals have, and are often easier tuck-in acquisitions or bite-sized deals for larger corporations or private equity. We believe this is a terrific moment for global M&A and investing in mergers and acquisitions. As we work through some of the speed bumps seen over the last several months, we expect deal activity to remain very robust. To learn more about our merger arbitrage investment strategies, please visit Gabelli.com. We're always more than happy to provide a more in-depth overview for you. Thank you.